Welcome to your weekly market update. Look, it's unbelievable. Interest rates are now convincingly, or mortgage bonds, I should be saying, are convincingly trading above this now, what's becoming a triple layer floor. So when you see these lines pinched together like that, it's going to be hard for mortgage bonds to go down, which means higher interest rates. So there's a lot of good upside looking on the horizon for mortgage rates. There's also weakness showing in the job market. There are two different different styles of reporting. There is the government Bureau of Labor Statistics reporting, and then there's the private sector. So let me show you how far off the government has been in reporting the Bureau of Labor and Statistics. This is how far they're off. So this is fourth quarter. The revisions just came out. This is how many jobs that they mentioned were created. That was 637,000, right? Now, when we get the revisions, it's actually 116,000 jobs created. So they're not even like remotely close. There's so much manipulation of the data. Imagine that it's an election year, but they're off by 521,000. So when you look at this over a quarter, you divide that 521 by 3, it's 173,000 jobs per month that they're off. So if you look at October, they reported 165,000 jobs created. It was negative. So that means there were more people being laid off and losing their jobs than jobs created, right? November, they reported 182,000. Interest rates went up drastically after this number because it was a surprise to the high side. It was actually 8,333. December 290. The actual revisions were 116,000. So it's not even close what they're reporting. And the problem with this is the revisions come out, we're in June, right? We're halfway through this year, and the actual numbers come in and they're way off. So the markets don't react to old information. So the markets and the the Federal Reserve are reacting to the information from when it comes out, but they're not reacting that much looking back. That's the problem, is they're looking at the wrong reporting. We're seeing this in CPI, which is the Consumer Price Index. They're reporting 5.4% that rent has gone up this year for people. That's 43% of the inflation report or index. Now, when you look at CoreLogic, which is a private sector and probably more accurate because there's no manipulation going on, they're at 3%. It's actually come down from 3.4% to 3%. So what does this mean? This means the truth always comes out. You're starting to see the truth come out. You're starting to see weakness in the jobs market. Unfortunate for those people, good for mortgage rates, good for the world that I live in. You're also seeing that rent's coming down. That's the biggest component. It's 43% of the overall consumer price index report. So the Fed will wake up at some point and see that the data they're looking at is highly skewed, highly flawed. And maybe they won't. Maybe there's collusion and corruption going on. Call me what do they call them? Conspiracy theorists, right? But the data doesn't lie and the truth always comes out. So what's this mean for you as you're on your home search? This means you should be looking at homes now, because weakness in these numbers means weakness in our economy. And when the economy is weak, the Fed will pull back rates. Mortgage rates will go down. There might even come quantitative easing because they've taken this too far, really pulling back mortgage rates, and there'll be a frenzy on the home search. How do we know this? Because new construction's doing really well. Lennar just reported record earnings. They're up 19% of what they were forecasted, and they're doing it through incentives of lower interest rates. They're buying down the interest rates. So you can see there's a lot of demand out there for home buyers when the interest rates are reasonable. We can also talk about this for you on buy downs of rates. So Stay diligent on your property search. They're starting to show weakness in the economy. Remember, real estate performs well through recessions. I'm not saying this is a recession, but if it headed into that, real estate performs very well. 13 out of the last 14 recessions, real estate has stayed the same or gone up. So remember that. Be diligent on your search, and we're here to serve you.